In 2025, some motorcycle brands are falling fast. Once legends of the road, they now sit untouched in showrooms, weighed down by outdated tech and fading identity. This video dives into 5 major brands that are quietly collapsing, and whether any can still be saved. From missed EV revolutions to failed upmarket dreams. Let's start with number 5 because the decline is already underway. Number 5, Royal Enfield. The thunderous beat of Royal Enfield's single-cylinder engines has been the soundtrack of Indian roads for generations, but in 2025, this iconic brand finds itself caught between its glorious past and an uncertain future. While the company proudly announced crossing the 1 million unit sales milestone in early 2025, a closer examination of their financial reports reveals troubling signs beneath the surface. Their Q2 2025 earnings call showed that while overall sales grew 6% year-over-year, this growth came almost entirely from their entry-level 350cc models, the Classic 350 and Hunter 350, which together account for a staggering 92% of domestic sales. This dangerous over-reliance on legacy platforms leaves the company vulnerable to market shifts, as evidenced by the Classic 350's unexpected 9.08% sales decline last quarter, despite receiving minor updates. The company's attempts to move upmarket have yielded mixed results at best. Their 650cc twin-cylinder platform, launched with much fanfare in 2018, has failed to gain significant traction, with the Interceptor and Continental GT models contributing just 8% to total sales. The new Himalayan 450, while representing a technological leap with its liquid-cooled engine, has been hampered by quality control issues reported by multiple motorcycle publications. Even their high-profile collaboration with Icon Motorsports on the Shotgun 650 appears to be more style than substance, with industry analysts noting it offers little beyond cosmetic changes to the existing platform. These struggles highlight Royal Enfield's fundamental challenge. While competitors like Triumph and KTM have successfully blended heritage with modern technology, Royal Enfield seems stuck in the past. Royal Enfield's international ambitions tell an even more concerning story. While the company's annual report boasts of 55% export growth year-over-year, their monthly sales data reveals alarming volatility, including an 18% month-over-month drop in April 2025. This inconsistency comes as competitors make major inroads in key growth markets. Triumph's new assembly facility in Thailand allows them to undercut Royal Enfield on price while offering superior technology, and KTM's partnership with Bajaj gives them unmatched distribution in emerging markets. Even in Royal Enfield's home market of India, the competitive landscape has changed dramatically. Honda's CB350 now offers better refinement and modern features at a similar price point, while Jawa's 42 Bobber attracts younger buyers with its contemporary take on retro styling. Perhaps most worrying is Royal Enfield's glacial pace of electrification. While competitors like Bajaj and TVS already have electric motorcycles in showrooms, Royal Enfield's much-touted Flying Flea sub-brand remains years away from production. Industry insiders suggest the company's first electric model won't arrive before 2027, putting them dangerously behind in what analysts predict will be the fastest-growing segment of the Indian motorcycle market. This delay is particularly puzzling given Eicher Motors, Royal Enfield's parent company, significant investments in electric vehicle technology through its partnership with Stark Future. The brand's product development struggles extend beyond powertrains. Owner forums and long-term reviews consistently highlight outdated features like tube-type tires, heavy clutches, and rudimentary instrumentation that feel increasingly out of place in 2025. The Himalayan 450's lack of switchable ABS and basic traction control, now standard on competitors' adventure bikes, has been particularly criticized by the motorcycle press. In urban markets, the brand's heavyweight cruisers have become increasingly impractical as traffic conditions worsen, yet their attempts to create more commuter-friendly models like the Meteor 350 have failed to resonate with daily riders. Royal Enfield's pricing strategy, once a key competitive advantage, is also under pressure. Chinese manufacturers like QJ Motor now offer better-equipped bikes at lower price points, while premium brands like Triumph justify their higher costs with genuine technological advantages. The company's recent price hikes, ostensibly to fund R&D, have only made their value proposition less compelling at a time when consumers are becoming more price-sensitive. While CEO B. Govindarajan has publicly acknowledged these challenges, the company's response has been frustratingly incremental. Minor updates like the addition of LED lighting and Bluetooth connectivity feel like band-aid solutions rather than the comprehensive overhaul many analysts believe is necessary. The company's much-vaunted modular platform strategy, announced with great fanfare in 2023, has yet to yield any significant new models. The stakes couldn't be higher for this iconic brand. With electric vehicles poised to disrupt the market and competitors aggressively targeting their core customer base, Royal Enfield must decide whether it will evolve into a modern motorcycle company or remain a niche player catering to nostalgic enthusiasts. The company's rich heritage and loyal following give it significant advantages, and if Royal Enfield doesn't change course soon, it might just become the next Jawa. Number 4. Suzuki. It's a story that's hard to believe for a brand as storied as Suzuki, a company whose motorcycles have long been synonymous with raw power, nimble handling, and unshakable reliability. But in 2025, that reputation is under threat like never before. Once the go-to name for affordable performance, Suzuki has found itself grappling with a steady decline that's leaving dealers scratching their heads and fans wondering what happened to the magic. In markets like the United States and India, Suzuki's sales numbers are slumping, despite the brand's efforts to keep the lineup fresh. In the United States, Suzuki's motorcycle sales in April 2025 fell by more than 18% compared to the same time last year, signaling a dangerous slide in what was once a thriving market. Even India, where Suzuki has long been considered a key player, saw a troubling decline in its domestic volumes by 7.4% in February 2025. That's no small dip. It's a gut punch in a country where motorcycle culture is a way of life. Behind the scenes, Suzuki's own statements reveal the gravity of the situation. The brand acknowledges that the business environment has shifted, citing declining market share in India and intensifying competition in the rapidly evolving electric vehicle segment. Once an icon of the middleweight and small displacement classes, Suzuki is now caught in a storm of changing tastes and fierce competition, where even its most iconic machines are starting to look dated next to the future-facing offerings from younger and more aggressive brands. What's driving this slide isn't just raw numbers. It's also about a feeling, a sense that Suzuki has lost touch with the spirit of the modern rider. Step into a Suzuki dealership today, and you'll notice something unsettling. Models that feel like relics of a bygone era. Key bikes that once defined the brand are either stuck in time or forced to retire entirely, thanks in large part to ever-tightening emissions standards that have left Suzuki scrambling. The company has spent its limited research and development budget playing catch-up, updating a handful of bikes at a time rather than boldly reinventing its lineup. This approach has left the showroom floor looking stale, with the same names, GSX R600, GSX R750, Hayabusa, barely changing beyond new paint jobs or minor tweaks. There's no denying the legendary status of these machines, but in 2025, buyers want more than nostalgia. They want cutting-edge performance, connectivity, and style. Suzuki's efforts to refresh some models have felt half-hearted at best. Take the stop sale fiasco of the GSX-8R in early 2024, when a defective drive chain rivet forced a recall just as excitement was building for a new flagship. That sort of blunder shakes confidence in the brand and makes loyal fans think twice. The much-anticipated GSX R1000 finally rolled out after years of anticipation, but the launch felt too little, too late. By the time it arrived, riders had already shifted their gaze elsewhere. Suzuki's other attempts to keep pace have been equally underwhelming. Updates to the V-Strom range and the dual-sport DRZ4S in 2025 were met with polite applause rather than the roar of excitement Suzuki so badly needed. In a world where technology and innovation are king, Suzuki's once proud lineup is starting to look like a museum exhibit, fondly remembered, but not something you'd necessarily want to ride home today. Meanwhile, the rest of the motorcycle world isn't standing still, and that's where Suzuki's struggles become even more glaring. Across the board, riders are looking for more than just basic transportation. They want motorcycles that feel like an extension of themselves, equipped with the latest tech and wrapped in cutting-edge design. Electrification is no longer a dream of tomorrow, it's the reality of today. Yet Suzuki's electric ambitions, while promising in theory, remain mostly vapor in 2025. The brand has publicly pledged to get into the electric game, but as the months roll by, there's still no breakout electric model on the market to show for it. Other brands are already putting fully electric or hybrid motorcycles on the street, and Suzuki's delays are turning what should have been a triumphant new chapter into a cautionary tale. Combine that with broader economic headwinds, high inflation, rising interest rates, and shrinking credit access, and it's easy to see why even Suzuki's usual affordable fun pitch isn't hitting the mark. Insurance costs have gone up, loans are harder to get, and the once clear value proposition of Suzuki's machines is now clouded by doubts about whether they'll still be relevant 5 years down the road. It's a sobering moment for a brand that once made waves with every new launch. Unless Suzuki can find a way to break out of this cycle by investing in fresh designs, embracing electrification, and showing that it's more than a caretaker of past glories, it risks becoming a footnote in the motorcycle story of 2025 rather than the bold, innovative force it was meant to be. Number 3. MV Augusta. Once revered by enthusiasts, the iconic MV Augusta is now fighting for survival in 2025 as a cascade of troubles engulfs the storied Italian motorcycle maker. What was once a symbol of exotic power and racing heritage has become a brand battling severe financial fragility. Years of ambitious expansion have given way to a reality of overextended budgets. Warehouses in Europe and Asia reportedly hold thousands of unsold MV superbikes, left over from production runs that never matched demand. Factories that once hummed with confident purpose now run well below capacity. To cut costs, management has even imposed salary reductions on technicians and administrative staff, bracing for lean times. The very owners who heralded a new era for MV now appear unsettled. Talk of a planned sale of the majority stake whispers of an urgent need for capital. This crisis in capital has clear consequences across the company. Promised projects and future models live on shaky ground. With investors wary and cash flow pinched, spending on research and development has slowed to a trickle. Without fresh investment, MV Augusta cannot chase new technology or expand production when markets recover. Marketing budgets have also dwindled, leaving once flashing displays at European motorcycle shows sparse and lacking the usual fanfare. High-priced prototypes gather dust instead of gracing headlines. Without steady financial backing, the premium image of MV Augusta loses its shine. The music may still rev high under the hood, but backstage the tension is plain to see. In this climate, even loyal fans notice a strange sense of restraint. New model announcements are fewer, updates come later, and an aura of caution permeates. When money is scarce and debt piles up, every decision is urgent. The company's narrative has shifted from daring innovation to damage control. Ultimately, such financial instability strikes at the heart of any brand's ability to compete. In a market where cutting-edge parts and timely releases spell success, MV Augusta's limping finances mean it can't keep pace. As premium competitors launch polished new models one after another, MV's engines may still roar, but the funding to keep them fueled and on track is running dangerously low. At the heart of MV Augusta's decline is a breakdown in product consistency. Fiery headlines and showroom glamour once masked what is now becoming common knowledge. Not every MV rolls off the line perfected. In one case, a gleaming new sports bike might leave the factory with a subtle flaw. perhaps a misaligned fairing bolt or a temperamental sensor in the engine computer. In another case, the same model might perform flawlessly. The difference can come down to the variability of craftsmanship. This patchwork of performance casts a shadow over the entire portfolio, undermining trust in the organization. It means one enthusiast's dream bike is another's roadside headache. The very excitement of owning an exotic bike turns into anxious anticipation of the following problem. And in 2025, with stiffer reliability norms and tighter emissions standards, such unpredictability becomes even harder to overlook. Every shaken suspension or sporadic throttle map only feeds the narrative that MV Augusta bikes come with a hidden cost of ownership. In the premium segment, reputation is built on consistent excellence. MV's erratic track record chips away at that reputation with every frustrated rider who has to summon a tow truck. That erosion of faith spreads quickly. No amount of marketing spin can rewrite a bad first impression. On the open road, reliability, or lack thereof, is the loudest story of all. And for MV Augusta, that story is increasingly about cautionary tales rather than triumphs. In a world where buyers crave both exclusivity and support, MV Augusta's self-imposed barriers, sky-high prices, and a thinning dealer network transform its dream status into a liability. In theory, charging a premium should signal confidence in value and reliability. But today, every eye-watering price tag on an MV model is met with a skeptical raise of the eyebrow. If you're paying tens of thousands for a new bike, you expect concierge-level service, readily available spare parts, and an ounce of reassurance. Instead, MV owners often find themselves servicing their pride and joy with the same anxiety as buying a supercar. Big bills and delays loom with every visit. The limited global network compounds the problem. Currently, MV has only 219 dealerships worldwide, planned to grow to 270, a number that barely covers the globe. For example, the average American or Asian enthusiast might face a 5-hour drive or a costly flight just to reach the nearest showroom. By comparison, more established brands have 10 times that many points of sale. This means that many potential buyers never even get the chance to test drive a new MV. Word of mouth dries up where bikes are few, making the brand feel less omnipresent than a legacy Italian name deserves. Even owners lament the lack of local support. A minor issue may send them to a waiting list months long, a frustration unheard of at this price level. All the while, the company's glossy ads promise excitement and exclusivity, but reality delivers a handful of hardy enthusiasts willing to jump through hoops. In short, MV Augusta's exclusivity has become a double-edged sword. It does attract attention, but its own policies shave away casual interest. The inevitable result in 2025 is that the brand finds itself confined to a tiny niche of the market. Without a broad, reassuring presence and with prices that strain justified value, MV loses out on riders who simply won't take the gamble. Number 2. Moto Guzzi. There's an unmistakable air of nostalgia that surrounds Moto Guzzi, an aura steeped in Italian tradition and the rumble of V-twin engines that have defined the brand for over a century. But in 2025, this storied heritage is failing to protect Moto Guzzi from the harsh realities of a global market that has moved on. Across Europe, North America, and Asia, Moto Guzzi is seeing an alarming decline in both sales and showroom activity. Where once their models like the V7 and the California stood as timeless classics, they now gather dust, unable to captivate a new generation of riders who crave more than just retro flair. Even in Italy, the heartland of Moto Guzzi's proud legacy, the once loyal base of enthusiasts is dwindling as younger riders and seasoned veterans alike look elsewhere for bikes that better marry heritage with modern performance. The sad truth is that the brand's image as a purveyor of laid-back, soulful rides has become more of a liability than an asset in a market driven by cutting-edge technology and dynamic performance. Dealers, feeling the pinch, report that foot traffic has slowed to a crawl, with test rides becoming rare and actual sales rarer still. These iconic machines, once the pride of Italian engineering, now sit idle in showrooms that seem to echo with the ghosts of a golden past that may never return. The financial data behind Moto Guzzi's struggles paints an even bleaker picture. Parent company Piaggio, which also oversees brands like Aprilia and Vespa, has watched its motorcycle division falter. In 2024 alone, Piaggio's overall vehicle sales dropped nearly 14%, with Guzzi singled out as one of the weakest performers in the portfolio. Instead of innovation and aggressive market strategies, Piaggio has opted to let dealers slash their inventories, hoping to mitigate the damage of unsold bikes languishing on showroom floors. But this cautious approach has only fueled a sense of stagnation, leaving loyal fans with fewer options and potential new customers with little incentive to join the fold. Global economic headwinds from inflation to high interest rates have further complicated the brand's outlook. What was once a premium segment bolstered by aspirational buyers has become a luxury few can afford, with competitors like Ducati and BMW offering more modern, exciting alternatives in a market that rewards constant evolution. Moto Guzzi's reluctance to aggressively pivot has left it exposed, a venerable name adrift in a sea of rapidly changing consumer demands and expectations. Compounding this financial turmoil is Moto Guzzi's product strategy, or perhaps more accurately, the lack of one. While the brand's iconic air-cooled transverse V-twin remains a signature feature, there's a growing sense that Guzzi has leaned too heavily on nostalgia at the expense of progress. Models like the V9 Bobber and the V85 TT adventure bike, once hailed as fresh entries, have seen little more than incremental updates that fail to address the underlying issues of performance, reliability, and technology that modern riders expect. Even the much-hyped new Stelvio, designed to compete with the likes of BMW's GS series, has suffered from reports of electronic glitches and underwhelming power delivery, further eroding consumer confidence. Dealers lament that Guzzi's new offerings feel like rehashed versions of old ideas, and while retro styling may still have its admirers, the absence of genuine innovation is glaring. Beyond the showroom, Moto Guzzi's distribution network is painfully thin, with some regions in Asia and South America having no dealers at all, while in North America the brand is often an afterthought in mixed-brand showrooms. This limited reach means that even those who might be curious about the brand's romantic image have few opportunities to see or test the bikes in person. Meanwhile, Asian markets that once showed promise have been hit hard by economic turmoil in 2024, with discretionary spending dropping sharply and premium motorcycle segments shrinking as consumers focus on basic mobility and affordability. And in Europe, tightening emissions regulations have forced competitors to invest in cleaner, more advanced powertrains, leaving Guzzi's air-cooled lineup feeling not just dated but potentially obsolete. Despite this, there's still a flicker of hope that Moto Guzzi can find a path forward, but it will require more than just the occasional special edition or cosmetic tweak to revive the brand's fortunes. Industry insiders suggest that Guzzi needs to embrace a bolder approach to product development, leveraging Piaggio's resources to create bikes that are not only beautiful but also technologically sophisticated, reliable, and accessible to a broader audience. The potential is there. Moto Guzzi's legacy and mystique still resonate with those who value craftsmanship and classic design. But in 2025, the brand's challenges are stark and undeniable. Declining global demand, an aging product lineup, and an uncertain dealer network that has lost faith in the promise of these Italian legends. If Moto Guzzi is to reclaim its place as a vital player in the world of motorcycles, it must do more than just trade on its name. It must prove once again that it can build bikes that ignite the same passion and confidence in the hearts of modern riders as it did in generations past. Number 1. Harley-Davidson. Imagine a quiet spring morning at a Harley-Davidson dealership. The polished motorcycles gleam under the sun, but they are eerily still. That scene is becoming all too real. In early 2025, the iconic American brand is facing a sudden collapse in sales that would have once seemed impossible. Worldwide, motorcycle retail sales plunged. Industry reports suggest nearly a 20% drop in the first quarter alone. Dealers that once struggled to keep Harleys selling now see them lining the parking lots, a clear sign of leaner demand. North American sales fell by roughly 1/4, Asia-Pacific demand slid nearly 28%, and Europe dropped as well. Even Harley's premium touring bikes, which usually shield the bottom line, weren't enough to pull up the numbers. In fact, first quarter profit plunged, and net income ended up about 40% lower than a year earlier. Executives openly blame a volatile economy and nervous customers. As Harley's CEO noted, a huge share of would-be riders are delaying a new purchase amid these uncertain times. High interest rates and inflation have tightened household budgets, and luxury items like big motorcycles are often first on the chopping block. At the same time, new trade tariffs threaten to add another $175 million in costs this year, according to company estimates. The outlook grew so cloudy that Harley-Davidson even withdrew its 2025 guidance, admitting it cannot predict how long these headwinds will last. To cope, Harley has begun slowing shipments, but that means inventory is piling up. Unsold Harleys rose in showrooms instead of falling, further pressuring profits. Right now, every statistic and dealer report seems to be flashing red warning lights for the brand. For a company accustomed to roaring growth and success, this sudden stall feels like a harsh wake-up call. Inside Harley-Davidson's design and strategy centers, executives scramble urgently to respond to the ongoing crash in demand. The turnaround plan, known as Hardwire, launched in 2021, had promised a modern reboot. The company concentrated on its high-margin core cruisers and touring bikes while exiting weaker markets. But the sales slide has shown the limits of that approach. By focusing so heavily on big V-twin cruisers, Harley suddenly finds its lineup less appealing to younger or more budget-conscious riders. The executives on the call conceded that the brand desperately needs smaller, entry-level models to widen its appeal, and plans were indeed announced to build simpler, lower-cost bikes aimed at new riders. But any pivot of this kind cuts against decades of Harley's brand image and engineering expertise. New prototypes and product ideas, from lightweight cruisers to smaller adventure bikes, are still in the lab or only just reaching dealers, and it will take time for them to pay off. One example is Harley's electric Livewire division. Once heralded as the bike of the future, its sales have flatlined. In the most recent quarter, Livewire revenue crashed over 40% as units sold plunged roughly 3/4. Even with the government clamoring for electrification, that program remains a huge investment with little return so far. Meanwhile, Harley continues rolling out new cruisers and even dabbling in adventure touring segments, aiming to broaden its reach. But each new model is a big bet. Development costs are huge, and there is no guarantee riders will respond. It's a high-wire act with no safety net. Focus too much on heritage cruisers and younger buyers stay away, but drift too far into new categories and core fans may balk. At its core, Harley's product strategy in 2025 is a balancing act between remembering what made it famous and chasing a market that has already moved on. For Harley, perhaps the wildest twist is happening not on the open road, but behind closed doors, a crisis of identity and leadership. Its core riders are aging. Baby boomers have been loyal customers, and now they buy far fewer bikes. Younger riders, millennials and Gen Z, have largely moved on to different styles. Harley has tried to adapt, but sometimes it backfires. A recent campaign intended to broaden appeal was slammed by fans as tone-deaf. At the top, change is underway. CEO Jochen Zeitz announced he will retire in 2025 after steering a 5-year turnaround effort. The board has even vetted outside candidates for a successor and then postponed a decision. An activist investor also went public demanding that Zeitz and several directors step aside, citing falling dealer profits and accusing the board of forsaking Harley's traditional culture. In a dramatic response, a director aligned with that group resigned, warning of a cultural depletion at the company. The board called those attacks misleading and dangerous, but the public conflict underscores the turmoil. Dealers have their own frustrations. Shrinking sales have squeezed margins, and they gripe that Harley's products often don't match what local riders want. Insiders note a growing disconnect between corporate leadership and the enthusiast community. Zeitz was a German outsider with little motorcycle background. Critics say authenticity matters to riders, and he has had to work extra hard to earn their trust. All of this makes the branding challenge immense. Harley isn't just selling machines, it's selling a dream of freedom and rebellion. But in 2025, that dream already feels strained. Fewer fans turn out for rallies and online buzz is fading. With brand and leadership both in flux, the road ahead for Harley-Davidson is uncertain and full of hard questions. Thanks for watching. Let me know your thoughts in the comments below, and don't forget to like and subscribe for more motorcycle industry updates and deep dives.